Booyah, let me ask you something. Are you tired of seeing your hard-earned cash just sitting in a bank account, doing absolutely nothing? Earning pennies in interest while the cost of everything goes up? Up? You work hard for your money. Shouldn't your money work hard for you? It's the question I get all the time. People think you need a PhD in finance from some fancy-pants university to get in on the action. Wrong. You just need a little homework and a lot of courage. The sidelines are for losers. The game is where the winners are made, and you need to be in the game. Let's get one thing straight right now. The stock market isn't some exclusive club for the ultra-rich. It's the single greatest wealth creation machine in the history of the world, and it's open to everyone. All right, let's pull back the curtain. What is this thing called a stock? Don't let the jargon scare you off. It's simple. A stock is just a tiny little piece of a company, a share. When you buy a share of, say, Apple, when you buy a share of, say, Ford, when you buy a share of, say, Starbucks, you are not just giving them your money. You are becoming an owner. That's right. You own a sliver of the company. You have a claim on their assets. You have a claim on their profits. When that company does well, when their profits go up, the value of your piece, your stock, can go up too. You're betting on the success of that business. It's that fundamental. Now, here's where the magic happens. It's a little thing called compounding. Albert Einstein supposedly called it the eighth wonder of the world, and he was a pretty smart guy. Here's how it works. You invest, and your stocks hopefully generate returns. Then, you reinvest those returns. Now you have more money working for you. That bigger pile of money generates even bigger returns. It's a snowball effect. Your money starts making money, and then the money your money made starts making its own money. It's how you turn a small nest egg into a golden goose over time. Ready to make your first move? Good. No more analysis paralysis. Here's your 3-step playbook to get off the bench and into the game. It's simpler than you think. First, you need to open a brokerage account. This is just the account that holds your stocks, like a bank account for your investments. Forget the old days of calling a guy in a suit. Now, you can do it from your phone in minutes. Platforms like Robinhood in the United States, Wealthsimple in Canada. They're designed for beginners, with zero commissions on trades. The gatekeepers are gone. The gates are wide open for you. Second, do your homework. I say it every night, and I'll say it again. There's no substitute for research. But you don't need a supercomputer. Start with free, powerful tools right at your fingertips. Apps like Yahoo Finance are fantastic. You can look up any stock, see its price history, read the latest news, and check out its financials. You wouldn't buy a car without looking under the hood, would you? Don't buy a stock without doing at least a little bit of digging. Now, I'm not going to sugarcoat it. Investing has risks. The stock market doesn't only go up, it goes down too. Sometimes it goes down hard and fast. We call this volatility. One day the market is roaring like a bull, and the next, it's growling like a bear. Your account value will fluctuate. It will go up. It will go down. This is normal. This is the price of admission for the potential of those 10% average long-term returns. If you panic and sell every time the market dips, you will lose money. I guarantee it. You have to have the stomach for it. The key is your mindset. You are not a day trader trying to time the market's every wiggle. You are a long-term investor. When the market falls, you can't see it as a crisis. You have to see it as a sale. When your favorite store has a 20% off sale, do you run away screaming? No, you rush in to buy. It's the same with great stocks. A market downturn is an opportunity to buy shares of fantastic companies at a discount. Sarah saw the market dip a few weeks after she invested. Her heart skipped a beat, but she remembered her plan. She held on and even bought a little more. That's how you win. So there you have it. The haze is gone. The mystery is solved. Investing in the stock market isn't rocket science. It's about having a goal. It's about a plan. It's about the discipline to stick with it through thick and thin. It's about becoming an owner, not just a bystander. In our incredible economy, we've talked about what a stock is. We've talked about the power of compounding. We've laid out the step-by-step game plan to get you started. The ball is now in your court. How? When? Now. I want you to take a moment and think. What are your goals? Down payment on a house in 5 years? Comfortable retirement in 30? A little extra financial security? Write it down. Make it real. Your goals are your North Star. They will guide you when the market gets choppy. They will remind you why you started this journey in the first place. Without a goal, you're just gambling. With a goal, you're investing. There's a world of difference. What are you investing for? Tell me in the comments.